I just ran into a new opportunity that I wanted to discuss. Basically, our partner with a gentleman that has the opportunity, exclusive right to build 11 Huddle House restaurants here in Chicago and Illinois. Uh, there aren't any currently in Chicago or Illinois at this point, so he's building the first one right now, and he has exclusive right to build 10 more. So I was looking at possibly partnering with him and see how maybe we can build those 10 restaurants in opportunity zone areas.
John, do you have any experience with that in Kingsport or anything, like adding these restaurants in to the models?
Well, I mean, obviously, hey, Arnest, good to meet you virtually. But so you're up in Chicago, huh?
Yes.
Chicago. Okay. Yeah. So I think that with that, you've got a combination of things to look at. Obviously, you'd have an opportunity zone fund, QOF, set up. They're going to be the ones acquiring the property, doing the upfit, and then either renting to the restaurant, or the restaurant being the QOZB that then acquires the property. So there are a couple of different ways I think that it could be approached. What's the exit strategy for you guys with the restaurants?
I'm sorry, can you repeat that?
Yeah, what's the exit strategy for you guys with the restaurants?
Well, basically, it ends up coming to end users, investors. So we just want to build and then sell them as we build them to investors.
So would you be so the franchise? I'm assuming this is a franchise, correct?
Yeah. Huddle houses are prevalent all through the South. There's not any in the North that I know of. And again, this is he's building one right now, the first one here in the state now.
Yeah. So are they going to be individually owned, or are they going to be under all 10 under the same group?
Well, we at this point right now we just have preliminary discussions, but we're looking at them being individually owned.
Mm-hmm. So yeah, I think those are some of the questions that I think you're going to have to look at. Obviously the fund can buy the property. They can acquire the property. They can build out for the restaurant and then rent to the restaurant.
Okay. Could it be a combination of owning, like say 5 of them, as a group, own 5 of them, then individually, sell off 5 of them?
Yeah. So again, it just depends on if you want to, build that restaurant up as kind of an anchor tenant, and then selling the property off after 10 years, and then not paying capital gains on the gain for the property. As far as the restaurants, now you could potentially have a restaurant group that manages and operates the restaurants. I see that as a QOZB, so you'd be operating that kind of outside of the normal parameters, right? So that would be kind of separate, where you could potentially sell that off as part of the QOF, or potentially as a separate part. I'm not sure exactly on the specifics on that, but I think that's probably how I would look at it, is either separately or together with the restaurant group versus the property.
Okay, yeah, that sounds interesting. Because we're just not in the beginning stages of trying to decide what we're going to do. So I would love to have some continued conversation on what's the best approach.
I also think, Arnest, this is a little bit of a disclaimer, right? That there's a compliance element to this too, and a legal counsel that that we're not providing here today. but definitely extend out, and we can connect you with some people that might be able to support you there as well. Hey Lawrence, you got the link, man.
Yeah, it was weird. It wasn't coming up on the website. I don't know. The first thing that was coming up was December 3rd for the pitch event, but that's all I was seeing.
I got your screen capture too. That's weird. We'll
Yeah.
troubleshoot, but at a later date. But
Not a big deal. Yeah, I mean, figure we'd get there.
yeah. So I see Audie's here. I see Bob's here. What's up, guys? And we kind of dove right into it, man.
Good.
Arnis has a potential restaurant model, I guess. And so Arnis, these are just so maybe Lawrence can chime in here too. Can you just do like a really quick recap now that of where you're at and what you're looking to achieve? I think it's great because it gives you a different perspective, right?
Okay. Well, hello, Lawrence. This is Arnett. I'm located here in Chicago. How you doing?
Great. Nice to meet you.
Okay. What I brought up was I have an opportunity to partner with a gentleman that has exclusive right to build 11 Huddle House restaurants here in Chicago, or well, in Chicago, around the state of Illinois. There are currently no Huddle House restaurants in Chicago or the state of Illinois. So this is a first, a nice opportunity.
Mm-hmm.
He's currently finishing up the first Huddle House now here on the southeast side of Chicago. So he came to me and wondered if we possibly can look at an opportunity zone, locate the other 10 restaurants and opportunity zone areas around the Chicagoland / Illinois area, and possibly use a opportunity zone fund to build them as well as manage.
Lawrence, do you have any experience with like tenants expanding and forming as OZ companies? Like John was just saying, that the structure of this is going to be critical, right? Like new business and an expansion of business. Like I know from, setting up OZworks Group as a QOZB that we had to create a brand new entity, right? So
Right.
I think that Ernest, that may be the kind of dance that, and John Vachon mentioned this as well, the dance that you need to start to go down the path of, and maybe even talk a little bit with some legal counsel about, is how that business is actually going to be structured. But Lawrence, maybe you have some insight on that too. Have you guys ever worked with?
Yeah, I would think that well, first of all, you have to decide, is each location going to be, are you going to lease the location, or are you going to own the location? And go ahead.
We were looking at possibly owning 5 of them and leasing out the other 5.
Yeah, so you'd want to have 2 businesses. You don't want to have an operating business, and you want to have a real estate business. And that way you have you own the real estate, and with your real estate OZ funds or other funds where they can invest into the real estate stuff. And then the operating businesses is a different, I would think, is a different animal on and how that's structured. And you want to have the operating businesses in their own entity as well. And maybe, and this is something you need to talk to your legal counsel with, but maybe you structure it as such that it's you have an umbrella, you have a master company, more or less, right? And the corporate headquarters is located in an opportunity zone, and then each one of those franchises is its own LLC or something like that. Is another way to possibly structure that deal in terms of the operating businesses. And so, and then you may have, the McDonald's, formula of owning the real estate and having the franchises pay the ground lease fees to the real estate company. So there's a few things that you'd have to consider. I think that's the way I would start to look at structuring it.
Okay, then we probably right now we don't have. So we just had this discussion last week. So we haven't talked about a legal representative or anything like that. So if you have any ideas or recommendation on some legal folks that we probably can reach out to start this conversation, we would definitely appreciate it.
Yeah, it was Chris. Is Ashley somebody that would fit that, or
yeah, that would be my
Patrick
recommendation.
Chagro.
Yeah, I mean, Patrick is actually up in your area, Ernest. Have you been connected with him yet, Patrick Chagro?
No, I haven't.
Okay, I'll connect you with both of those guys. You also might want to check out so Ashley Tyson, who's one of my partners in OZworks Group. just go to ozpros.com and
Okay.
you can actually set up like a strategy call. One of the things that I recommend is to have conversations with people in the community first, and then go to the strategy call, because you can start to really like hone in your questions that you have for Ashley and maximize that time. Because I think there, you can buy like basically an hour's call to get your strategy all ironed out. But first thing, the other thing is, I think we're doing Arnest Monday. We're doing a compliance session. You might, it's an open hour with 3 compliance people that you may even want to hire.
That's one thing I was going to suggest too, Chris. That's great. Yeah.
Yeah,
And
and if you can make that, Arnest, I think it might be noon to 1, but you could double check. That's just a great way to like get in, and you could even talk about the same topic, and get some input from. Just say, hey, Lawrence told me to do this. See what the compliance guys say.
I didn't tell you to do it. That was an opinion.
You can say, John told me to do this.
I definitely will. I definitely will be on. I will be available.
Okay, great. Yeah, and check out OZ Pros, and if you have questions, and I'll definitely connect you with Patrick and some of the other specialists. But yeah, it's an interesting model, right? Like utilizing these different operating businesses, which I mean, you see some of it, but Bob, I mean, you're kind of going through that as well, right? With your different locations in a way.
Very, very similar.
What are some of the challenges that you're running into, maybe that Arnest could consider?
Raising capital.
Well, he sounds like he already has money.
You asked my concerns, but no, seriously, it's just how you structure them. I've done a lot of restaurants over the years too, and doing the operating businesses QOZB makes a ton of sense, especially if it's a franchise model. Now they may have some requirements on what your franchise contract says, and you'd have to find out if you can do it for separate entities.
Yeah, Arnest,
Okay.
are these are you already strategically partnered or business partnered with the entity, the franchise entity?
Yes, with the gentleman that has exclusive rights. Yes.
Cool.
If that's the question you're asking.
Yes, yeah, that's what I was curious about.
Yes.
Yeah, it sounds like there's some potential there. So I don't know, did you have any other?
Sometimes those master development agreements are written where it has to be just one entity. So you'd probably have to get approval to split it up into 2 entities.
Okay.
Homework, you got homework.
Read the fine print. That's right.
always
I
read the
love
fine print.
homework. I love homework and research.
Yeah. That's great. So huddle spots. I'm not familiar with huddle spots. Are you guys?
Huddle houses. They
Huddle house,
Or
yeah.
huddle houses?
they're based out of Atlanta, out of Georgia,
Yeah.
and they're prevalent through the South, but there's nothing
Oh.
in the North.
Oh, okay.
What kind
Yeah,
of food are you going to treat us to?
You can't miss them.
All type of nice food. I think you really will enjoy it.
Well, if it's Southern, it's got to be something that I'm going to enjoy, like Southern food, man. That's comfort stuff. Is it like a sit down place?
Yeah, kind of like your Denny's, your IHOP, type
Mhm.
model.
Mm-hmm.
Just give you an idea. Yeah.
Then I think there's, like Bob was saying, and so is Lawrence, like check out the fine print, see what you can do to navigate some of that, because there's definitely going to be, I mean, when I come from the co-working industry, and there are all kinds of different franchises that were coming out of that world. Bob, you're probably familiar with this too. And
Yep.
Man, I mean, those franchise contracts were just,
Yeah.
They can be tough, man.
yeah.
But like my business partner is always says everything's negotiable. So let's just say Huddle House probably has never thought about implementing or putting their places in opportunity zones, and so this may be a new thing for them to even take a look at and kind of update or upgrade their agreements.
Yeah.
Yeah, it's a great thing for the capital stack, especially in Chicago.
Mhm.
Mhm.
Okay, all right.
What part of Chicago are you going to focus on?
Well, really, we have flexibility because from the standpoint of you have aldermen all around the city trying to get us to locate them in their particular wards around the city, whether it be the north side, south side. So right now, we're up in the air because we're just scouting locations and to make sure there are going to be in opportunity zone areas.
Yep. I grew up at 111th and Halsted.
Oh wow! I used to play baseball out there at Mount Vernon, right off 107th House.
Yeah. So I'm a Chicago native.
Man, I love it when like the universe comes together like this, you know. There you go, Ernest. You got roots with Bob, and Bob has some experience in creating these umbrella structures. Maybe you guys can even connect and jam about this.
Sure, we will. Look forward to it.
That's great.
Yeah, Arness, I think another thing to consider is, obviously you think about the exit, right? Think about the exit strategy. So if it's a real estate play, then, how you set that up again, Huddle House may have, I know that they've got some regulations as far as, they're going to look for traffic counts. They're going to look for, it's got to be an end spot or maybe even an out parcel. But it could be potentially like in a larger development. So let's say you're doing a larger commercial development, identifying properties that are more than just the Huddle House site, right? And I don't know how much capital you're working with, but thinking about some of the ancillary so that the real estate component is larger, because then, when you're selling it 10 years down the road, that's a factor to consider. So are you renting back the space, or is Huddle House, is that going to be buying the property? So there are a lot of different factors, I think, to look at.
Okay, because as a matter of fact, we're working not only working on Huddle House related stuff, but we're also working on mixed use developments. I have 6 development partners that have done major development around the country, commercial and residential. So we've been focusing on like for instance, I'm from the Inglewood community here in Chicago, right off 63rd and Halsted, Bob. And,
I went to Chicago Christian High School, so that a lot of people from Englewood used to go there.
okay. And so what's going on in my community, I was able to partner with a developer several years ago. And so we have a $70 million development that we're breaking ground, mixed use development in the spring of next year, 2022. And that's going to take up 2.5 city blocks, which it's going to be 240 units of apartment and townhomes and 20,000 square foot of retail space. And one of the buildings is going to host a 20,000 square feet of retail space. So that could be a possibility at one potential location, because my whole community is an opportunity zone area.
Typically in the fast food business, and I haven't done it for a long time, but I did a lot of Mr. Burgers. I did Brack's Restaurants. Anyway, the strategy for a lot of people is if you could get 10 to 20 units up, the franchisor would typically like to buy them. So that's a pretty good exit strategy once they get a significant amount of units in a regional area. They typically are buyers.
Yeah.
Okay, yeah, because they're not only our project, but there are 2 other projects that will be taking place within 2 blocks of that. So you're gonna have like 420 units of new apartments. Everything is new, and so I think that might be I like that strategy.
Yeah.
Ernest, either you're really powerful manifester or Patrick Shagru has some kind of listening device in, because he showed up as we were talking about him. Patrick, are you there, man?
I'm here, but I didn't do my hair today, so.
You and Bob didn't do your hair together.
What's up, guys? How's
Hey,
everybody?
man.
Hey, Patrick,
Hey.
how are you?
Good,
Good to see you, dude.
Happy Thanksgiving, everyone. Sorry, I'm late.
Same.
You too.
Well, we were just talking about you because Arnis here has a potential franchise concept, I guess I'll say, or business model that he was curious about utilizing opportunity zones in conjunction with. And He's in Chicago. Lawrence was like, hey, what about that? What about Patrick there? I mean, I mean, regionally, you're kind of close by, but
Yeah, Bob and I are both Bob and I are a short swim from Chicago.
yeah,
Yeah.
and I was gonna connect you with Arnis on the platform.
You can swim faster than you can fly most days.
Do that.
So I was gonna connect you guys anyway on the platform, and then you just showed up. Like, you know, the world works in funny ways. So Arnis, meet Patrick. Patrick, meet Arnis.
What's up, Arne?
Nice to meet you.
And
Nice to meet you.
Patrick, I don't know if you have any experience with setting up sort of like an umbrella for franchises, but they're talking about, Arnis was saying that he has 5 of these franchises that would lease and 5 that they would own property on. But we were just, you know, in our roundabout knowledge of OZ legal stuff, saying that there's a couple different ways to do it. And also that he needs to potentially look into the fine print of that franchise contract to see if he can split them up somehow. Do you have any experience with that, man?
Well, I mean, probably the most experience I know is Bob Dykstra in one of his many 9 lives of real estate development. You know, and so, you know, what Bob had mentioned before, the model of, you know, building out, you know, your stores as, you know, starting proving concept with company stores, then developing a franchise and having I don't know if you're intending, Arnes, to develop your own franchisor, or you're intending
They're buying one, Patrick.
Okay, they're buying.
And maybe Arnes should give the 5-second.
I don't want to backtrack
intro to it.
Yeah, I don't want to backtrack on it, but I can say this, that you know, there are definitely plans for acquiring franchises or franchisors, and then, you know, how do you either aggregate or disaggregate those to franchisees or other investors in general. And I think those rules have been around for a while and are good to follow, and guys like Bob have done a lot of that. You superimpose upon that the OZ structure, and it just makes it more complex. So I haven't done anything like that in terms of a franchise distribution with an OZ fund, but you know, it would be interesting to kind of work through, as apparently that's what you guys are doing, Arnes, right?
Correct. And we're in the very early stages. And I just received this opportunity just last week, and I thought maybe it was a good idea to, you know, bring it to this particular, you know, platform, and to see how, like you said, how we possibly could, you know, work through it.
Right. There's always the issue with opportunity zone businesses of, you know, not being able to have subsidiary companies, really. You know, to the extent you develop your locations as individual sort of SPE, special purpose entities, that just needs to be worked through so that we don't violate the no subsidiary or 5% non-qualified financial asset rule in a real estate portfolio.
Okay. Well, I would love to see how we possibly could work with you and anyone else that may be interested, to see how we can work through this process and make money, of course, in the process. And like you said, maybe
Arnes, what's the nature of the product that you're going to be delivering? Is it
they're Huddle House restaurants.
okay, restaurants? Okay.
Yeah.
I would say it sounds like everybody here is a good person for Arnes to connect with.
I would agree. Yeah.
Yeah. Arnes, I mean, everybody showed up at the right time. I just think it's hilarious that Patrick just showed up. I mean, literally just talking about him.
I've been wanting to go to every one of these real estate deals, Lawrence and John's, but I just haven't been able to pull the trigger here at the end of the year. So I'm glad to join. Sorry to join late, but yeah, this is like an incredible group of experienced real estate developers. I'm surprised you're not selling tickets for this guy.
Well, and we
hang on. You know, the value just increased now that John's on the platform.
Yeah.
Well, yeah, and I also wonder, like, we're kind of still in holiday mode. I think Lawrence, last session, I think we had like 16 or 17 people maybe. I might have missed one of them, but yeah, I mean, this is, and then the compliance thing is next week, Patrick, and we were also saying to Arnis that he should chime in there and jump onto that. That one's been really well attended as well. So, you know, I'm curious, Patrick, did you have something you wanted to bring up?
Nope, I just wanted to, well,
Yeah.
there's always something. But really just wanted to get, sort of get, it's been on my calendar to jump in if I can, and I plan to be in the compliance one as well. I think a lot of good conversation can happen in these group meetings. So just wanted to participate.
Yeah.
And check out what was going on.
Absolutely.
I do have, I do have a project. It's not an opportunity zone project. So I don't know if we're allowed to talk about it.
I mean, it's a free country, free session, so.
All right, this is the half
Yeah,
floor.
I mean, these sessions are great. Throwing things on the table.
Yeah, half floor
and getting
elevator
feedback
pitch.
is
It's
awesome.
it's a private company that owns a portfolio of approximately 600 single family residences, all rent to own, all grown organically over the past 30 to 35 years by the same two partners. They have done it through largely 1031 exchanges. So they find themselves without a succession plan, but they have a company which actually, runs these companies. These homes, they're in 2 counties in the Quad Cities area of Iowa and Illinois. So they're very consolidated. They have, relationships with maintenance people and all of the support services you need to maintain a portfolio of rental properties. They have a very loyal client base or tenant base because of the rent to own feature of these leases. And anyway, they are now looking at themselves saying, whoa, we have no succession plan. There's nobody in the family to take over. We have no basis in our assets. And we really don't, we haven't built a management team that can buy us out. So maybe we need to look at how we could possibly sell our company and or our property. So there's an opportunity there. It's kind of interesting in that it is so condensed and really well run, really good control over their properties, having grown them all. And if somebody was interested in the portfolio as a whole, you could buy the company and not have to retitle the assets. That's all I got.
Would the CBRE group do that? They were focusing on single family home rentals.
I don't know who would do it. That's why I came here.
Yeah. They are, so Patrick, so they're looking to sell the whole, I mean, obviously it seems like the easiest and what their target would what they would like to do is sell the entire portfolio as a whole, right?
Yes, or if there was somebody that would want to take part of it for some reason, as long as it wasn't a cherry pick type situation. I mean, their druthers would be, if they were going to sell assets, would be to sell the ones with the highest basis, adjusted basis.
Mm-hmm.
They have a huge tax problem right now. So
yeah, I was going to say
one of the partners, a 50-50 partner, has moved to Puerto Rico and is aware of opportunity zones. He's a client of mine on a self-directed QOF doing other things in Puerto Rico, but he just said, well, we ought to talk to, my partner about this huge problem we have of capital gains in the US and how we might be able to deal with that. Obviously you got to realize your capital gain before you can enter the OZ zone, if you will. But you got to plan for that when you got such a big nut to cover.
Are these guys, these partners, are they older at this point? Do they want to exit out and retire? Or?
Well, one has already moved to Puerto Rico and he's doing a lot of just smaller commercial real estate development, but a lot of crypto trading. Imagine that in Puerto Rico.
Yeah.
And the other one is really the operating partner. He's a lawyer, he's an accountant, he's written every title opinion on every property they have in their portfolio. Basically, he knows every lease, he's written them all. So he's a little scared in that he doesn't know what to do when he does sell the company. But he realizes that, you can't, he's got to start thinking about it. He's in his early 60s.
Mm-hmm. Is there any kind of opinion of value at this point of the whole portfolio?
They have an opinion.
Yeah, I'm sure they do.
Yeah, their opinion is it's 60 million.
Uh-huh.
So they have what I would call a foyer or a very preliminary data room showing 3 years financials for the company, not property by property. If anybody wants to see property by property, then they need to get into they need to get into an NDA anyway, but kind of see if they're capable of pulling off a deal this big. So they would like to see some level of proof of funds before they get into property by property analysis.
Yeah. Oh yeah, for sure. Right. That's interesting. Wow.
Yeah.
And they self-manage this whole thing, huh?
They have.
Wow. That's impressive.
Their revenues grew and their vacancies didn't fall off during COVID, but nobody's did because you couldn't kick anybody out. But their average tenancy term is about 8 years, because people view that they're building equity, but they're the kind of folks that just can't really pull it together to get the down payment together. So they just stay on and take care of the property and keep hoping that at some point they can, they earn a little bit more equity, every year that they renew. And, by 8 to 10 years, the present value is of that, whatever the equity they earned is zero.
Mm-hmm.
So
they don't want to sell these things back to the tenants, or is that part of
the tenants can't qualify usually.
They just don't qualify. Yeah. Got it.
Well, Zillow's not a buyer anymore.
Yeah. They don't want to individually sell these properties. That would be daunting for them.
Oh my gosh, yeah.
Yeah, they would prefer to find a professional real estate company that is interested in a consolidated portfolio that they feel is very well managed.
John, do you have a handful of properties, right? I mean, I'm just curious, as Patrick's talking through this, like, is there a strategy that you're using that, you have a bunch of properties? I mean, as much as you are willing to and want to dive into your own, project, but maybe you don't want to. That's cool too.
No, that's fine. I have more questions first. So, would these qualify as original use or substantial improvement for a QOF to buy them?
They're not in a QOZ.
So it's not a QOZ.
It's not a QOZ deal. I mean, there may be a couple of them in it, but
that's what I was going to say. Is it adjacent to it? Could it? Because there's a straddle rule that some can be in, some can be out, and
I took an initial look at that, John, and I said it's not a QOZ play.
Okay. So they're looking at it just strictly a real estate, portfolio that they want to sell, and they're going to recognize a capital gain, and then they've got to decide what they're going to do with their capital gains. Correct.
Right.
Gotcha.
Right. And one of their options for managing their gain, if they're fortunate enough to realize one and selling all or part of their company, is the opportunity zone track. And one of the partners has already, as I said, formed his own self-directed QOF and done some stuff.
Yeah.
In Puerto Rico.
How close is it to an opportunity zone? Like just adjacent to it, or?
Well, I mean, it's not. I mean, these houses are dispersed throughout 2 counties in the Quad Cities area. So I would just say get a map of the Quad Cities, and you can, it would have to be. I don't think anybody's done that analysis on an address by address basis.
Do they have a map overview of kind of like of where all the properties are located?
I'm sure that they do.
So one suggestion. So we have 23 properties. Of those, 15 are qualified opportunities on properties. 13 of them would fall under substantial improvement. 2 of them would fall under original use, right? So we've broken it down from that standpoint to make it easier for a fund to be able to come in. So if they've got, I mean, you said what, 600 units?
Yeah, and I would say, to answer your question on that, John, we're at a potential opportunity zone play. They would all be substantial. I would predominantly, overwhelmingly substantial improvement.
Okay, so what?
They haven't been vacant and they don't need to be built.
Right, exactly.
Yeah.
So there's not the opportunity for them to be substantially improved by the amount of basis, that you're talking about, right?
I wouldn't think so.
Yeah. So I don't know. I mean, if again, if it were me, I would at least look at it. I would break it down and say, okay, are any of these in an OZ? If there are, then you can kind of put together an OZ portfolio and a non-OZ portfolio.
Yeah, it's good. That's a good point, John.
And then at least you're looking at it and saying, okay, well, these we can, because again, like to your point, two completely different sets of rules. Then you figure out, okay, the ones that are in the OZ or maybe adjacent to it, maybe you look at surrounding properties and working with some of those to make it a bigger portfolio for the OZ play. So anyway, that's just kind of initial thought right there.
Yeah. No.
So that's 100,000 a unit. That doesn't sound too bad.
Right.
It's just a little old Midwest town.
Yeah.
That borders both sides of the Mississippi River. 45 miles due south of where my in-laws live, Galesburg, Illinois.
I love it. It's like it starts without OZ involved and then it ends with it totally fully involved.
Well, yeah, that's a great idea, John, to look at it possibly as a split portfolio, just to give the option. Yeah.
Again, I mean, we've been, I guess, OZs, we've been in it as a group. We've been in it for 2 years now, right? Everybody's just trying to figure out, okay, what are they, first of all, and then how do you work with them, and so that's what we had to do with ours. And so first I was pitching 23 properties, 260 some thousand square feet, and this, that, and the other. And then I really broke it down. I've read through the 136 pages, and it's just mind numbing, but read through just to kind of figure out what it was, what we were dealing with. And I still don't understand. I mean, none of us understand it all, right? It's a perpetual process of, just understanding. And then, we get to a question like Arness has, and it's like, oh, well, let's look at it from that point of view, And so I think that's the beauty of this community, is being able to work through these ideas. But yeah, that's what we had to do. So I went from 23 properties to 15 that are actually qualified opportunity zone properties, right? So it's like, okay, well, the other 8 or so can't do anything with those. Maybe we'll just keep those in our current company portfolio and sell those as they're right near the OZ, or maybe they're in the OZ and they can't be substantially improved. So it's just a different combination, right? And so we just went down through there, looked at them individually. But yeah, I would definitely recommend that, just to at least see what you have. You never know.
Right. No, you don't. And we haven't, at least I haven't done that analysis, and I know they haven't, because they met in opportunity zones through me. So
sure.
But yeah, this at this point for me is just kind of as an aside. If there's somebody that I think would be a qualified buyer, make an introduction to them. I have not looked at I've not built the data room. In fact, I've not seen the data room other than the preliminary 3 years financials data room that I said, you got to have that. You got to show them something.
Yeah.
So.
It's great.
Yeah. This, like, going back to Arness's deal with the having a opportunity zone business, and having the franchise business, the headquarters being located in an opportunity zone, and the rule that a certain percent of your income has to come from opportunity zone businesses, or wherever they're located, and if you have half of those, maybe that might be a big consideration too, and as to how you structure things with all 10 of them that you are intending on having.
Yeah,
I
has
think
our,
it's 10, you said.
maybe Arnesh, you covered this, but the existing 10 over my keyboard locations, how many of is the headquarters in an opportunity zone, and how many of the 10 locations are in opportunity zones?
Right now, we're in the early stages of it, so we plan on locating the headquarters in the opportunity zone, and we plan on having all the locations in opportunity zones around the city of Chicago.
Well,
Problem solved.
yeah, if they're in there and your workers are there and your headquarters is in, your franchisor headquarters are in opportunity zone, I think you've got your test met on your 50% of your income being trade or opportunity zone income.
Yeah. Yeah, but that also allows you, Arnest, to if as long as 50% of those are, like Patrick said, as long as 50% of it's derived from opportunity zones, the other 50%, you know, if you can run into problems finding locations in opportunity zones, you may be able to just have non-OZ locations and still get the benefits.
Okay, that makes sense. Okay, I like that.
Yeah, so it's only required that if your business is held, if your operation is held through an opportunity zone business, that 50% of your income be derived through opportunity zone activity, which is usually measured by payroll, interestingly enough, more than income. But
Huddle House will have some standards for site plans and criteria, traffic counts and everything like John mentioned before.
Yeah.
You know, so you can almost tell if they'll work in opportunity zones.
I'd be willing to bet you get at least half of them in opportunity zones.
Yeah, if not all of them.
Yeah.
Arnest, have you made the acquisition yet, or is this an acquisition play for you at this point?
Yeah, like I said, yeah, we're at the very beginning, so that's what it would.
Okay.
They're
Yeah,
they're the beginning of the due diligence. Yeah,
That's right. They have a lot of flexibility of where they can go within Chicago area and in Illinois. Is that correct, Arnest?
Yeah.
So yeah, they haven't made a decision. They've got one that is under construction, almost complete, but then the other 10, they're looking at, okay, you know, we want to put them in our opportunity zones. Where do we put them? And again, to Bob's point, you know, the Huddle House is going to have some of those regulations that say, okay, here's, you've got to have at least meet this criteria. Now, I do like your play, what you were talking about, putting them in with, you know, some of the mixed use development, because that's obviously going to bring, it's going to elevate what you're able to bring to the table and to Huddle House and be able to justify, well, we're going to put it in here, but we're also going to put in, you know, hundreds of residential units, some other commercial properties, and doing it as a larger development like that. On the real estate play, the exit of that is going to be much more attractive to, you know, commercial real estate group, right? So,
you know, with the way you could raise capital through the OZ zones, you probably wouldn't want to have any sub franchisees. You'd rather be all owner occupied.
yeah, it'd be
Theoretically gives you better exit strategy then too.
Okay, yeah, I like that too.
Yeah.
Okay.
Yeah, Ernest, man, you're getting the hookup today.
Yeah, exactly, and this is, you know, I'm really excited about this, and I know once I get off this call that I'm gonna just go bonkers, you know, based on
Good.
the good thing is I'm involved with several developments around the city of Chicago, all mixed use developments. Some will be commercial, but most of them are mixed use. And I'm looking at, like I said, putting one of the restaurants in each one of our mixed use developments that we are involved in.
That's a great play.
That is a great strategy. Yeah.
I want to give a shout out to Ronaldo. Hey, what's up? Are you still down in Central America, man?
I am. I'm still in Colombia. I was going to go back home, but I mean, I'm just waiting for my wife's passports in the mail so I can go back. But I really thought I'll be back home for Thanksgiving, but I guess not. Which again, I'm not complaining because the weather's very good here.
I was going to say it's got to be better than Lawrence, Massachusetts. So
or Michigan.
But you know, I'm still here. But I'm sorry I'm late, guys. Want to jump
welcome.
in. but I'm here to observe, to learn. I'm a newbie when it comes to QoZ. I'm from Lawrence, Massachusetts, which is a big area of QoZ, and I'm into 3D printing development and real estate. And my hopes is that the next, 3 to 5 years, I can start developing real estate development projects around 3D printing on QoZ land. So I'm trying to observe as much as I can and build relationships. So that's my purpose here today.
Fantastic.
Cool.
Do you have any real estate specific questions or sort of like concepts or ideas that you want to pitch out here to the crew?
Well, basically, I mean, when talking about 3D printing, it's a technology. It's a new type of model, a new machine. It's different than what we're used to. I'm wondering if that affects anything when it comes to QoZ. It's just a different way of building things. I'm wondering if one needs certain type of permission or one has to go through a certain channel to get certain permits, because it's just a different way of building. That's all. Because, for example, for 3D printing, not every state will pass it because it may not meet zoning code yet. But I'm wondering on QoZ, is there any other sort of roadblocks I may see down the road? I don't know. Open box.
Yeah, that's into my experience is that it's just if it meets the zoning and codes that it's game on.
Yeah.
I mean, I'm out here in California and with some of the most strict zoning and codes that you could imagine, and 3D printing of these units is becoming very popular, especially for what they call ADUs, additional dwelling units that people are allowed to put in their yards now. It's very cool. There's a few factories right here. In fact, one's right across the bay in Oakland, and I've visited it. It's great. It's starting to catch on, and I think you're targeting a real nice opportunity.
Yeah,
I appreciate that.
Yeah, I think the insulative properties, of the material, the concrete, obviously they're doing it in like Phoenix, a lot of Arizona, Nevada places, the heat. So the other extreme, obviously, you got the Northeast there. So I think it would be good. And it's something, again, it's something that's innovative. But I think every community is going to have their variation of the International Building Code. So yeah, if it's flying in California and some of these other states, I don't think you're going to have a problem. It's just adapting it to that local community. And that's going to be your architect having that discussion with the local building officials. That's really key, is finding an architect that really knows and understands that technology. So that's going to be key.
I appreciate that. One thing that I do want to mention, I know that we're running out of time. Well, 10 minutes, but 3D printing machines are very expensive. I was thinking about creating a fund, raising capital to buy the machine, to work with a developer to build these projects on QoZ land. I'm wondering, again, just for educational purposes, is it best for one to create a fund or to go to a QoZ fund and kind of pitch a project and kind of partner up that way, versus create my own personal fund, raise capital through QoZ investors, and then tackle a project? I mean, what would be the best approach for something like this?
Wow, it depends on how ambitious you want to be.
I
think you could do it. I actually think you could do it both ways. I mean, we look at it a couple of ways too for each project, just on real estate development projects, and so if you want to take that on, you could do it. You could have both. You could have your own fund, and you could have other QoZ funds invest alongside that fund as well, if you really want to do that, and locate that business, that printer in an opportunity zone, in a warehouse in an opportunity zone. So that's what they did in Oakland. And, that's how we do just standard, real estate, multifamily, mixed use projects. We look at them the same way. We invite other QOFs to come in, invest alongside us. So, I think you could do it both ways.
Cool. Okay.
I think it depends on your appetite for just the compliance and the regulations that go along with QOF, right? If you feel comfortable with that, or you have somebody that is in your partnership that is very astute, then yeah, you know, you can do, but you know, having that fund manager that is taking care of all the compliance, the details, so you can focus on the actual, like you said, the 3D printing and, you know, some of the other stuff like that. Yeah, I think it's very difficult for one person to do it all. So you really need a team.
That's
That's a
correct.
good
So-
point.
So how to say it? I'm more of the, right now I raise capital for multifamily investments along the Southeast. So I have that type of skill set to raise capital and kind of work with people and do sales. And I'm also like a tech savvy guy because that's my background, is mostly tech. My other partner, she's more of the engineer, the one that knows a lot about the machine and how it works, the operator, the material science for the materials to build the building, all that stuff. What I don't have is a fund manager. Wondering if Chris or anyone here, is there a fund manager that you guys know that may be open to something like this that maybe I can partner up with or start building that relationship?
So your specialty is raising capital, it sounds like.
Right now it is. I mean, that's what I've been doing for a year and a half, is raising capital. And I've been doing a little business development. So I get along with people. I think that's really important, is how to explain that vision, how to get along with people and make numbers make sense. But you're right, I can't do everything. I mean, all I can do is provide the vision and then bring the right people to the table and just execute, you know?
Ronaldo,
we're looking for people to come onto our team to raise capital.
I was gonna say, you might have a job offer in about 3 seconds.
Two of
I mean, because we are
two of them already.
I'd rather manage the fund.
I mean, that's tough. I mean, I get it. I mean,
Yeah, but that's great. That's awesome. That's awesome. I'd love to hear your more of what your idea is. Do you have a business plan about a location already picked out about, you know, with this?
Location, not yet. Right now, working on building prototypes of 3D printing just to get all the bolts and nuts out of the way, understand all the numbers, because I know investors want to know what the numbers are, what the returns are, all that stuff. So we're working on that piece right now. In terms of location, we're still open to that. It could be south, it could be northeast. The most important thing is to get a few projects in the door, regardless. And then from there, we can kind of start scaling up. But right now, we're building these pilot programs where I live near Lawrence, Methuen area. I live in Methuen. I was born in Lawrence, which is like the town over. Methuen does have some QOZ. Lawrence has a lot more. The goal is that we do it in Methuen, which is my hometown, because I know the mayor very well. He was an executive at Raytheon, where they were building 3D printed missiles and stuff like that. So he kind of said yes to it. So we're still in that to make that process or this project happen in Methuen as a case study. So then I can kind of go into Lawrence with something to show. And not only that, but Lawrence, the only challenge is that the mayor doesn't speak English. I mean, I speak Spanish, which is great. He speaks Spanish. But I think is some folks don't know a lot about technology, and they get scared to think about risk and everything else, because if they don't get it, they're not going to do it. So that's another roadblock I may find in Lawrence, is the education part of 3D printing. You say
You should look at
go
some
ahead.
smaller towns like Kingsport, where John's got some really great contacts.
okay.
And it you know, it's a growing market. It's a good place to start. Land prices are reasonable.
We're looking to see how we can find a QOZ land to create a smart city. That's like the long
Okay,
term.
well, all of Kingsport is considered a smart city, and it's all an opportunity zone.
When you say Kingsport, where's that at?
And East Tennessee, right, John?
Correct. Northeast Tennessee. That's where Tennessee meets Virginia, North Carolina, right up in the corner, northeast corner. So
Hey, Patrick, are you chomping at the bit to say something to Ronaldo?
No, I was just going to say to Ronaldo, with respect to the admin side of OZ and fund management and that, there's another group called the compliance group in the OZworks platform, that they have small group like this for compliance issues. And there's a lot of fund management experts in there. You may want to just kind of visit that group when they meet next, and you'll get some great introductions to people that do that professionally on a contract basis, or even for their own portfolio funds.
Yeah, particularly if you're gonna consider having your own fund. Yeah.
That's Ronaldo, that's Monday, this coming Monday, that compliance zone group. So just FYI. It's so And it's, you need to connect with Lawrence to maybe get a job, and then Patrick might be able to help you with compliance, and Bob's raising money, so maybe you can help him. And then John is your connection to Kingsport to set up your
We
smart
can
city.
all go to
Hey,
Chicago
Ronaldo,
and
have
eat,
you?
eat at
Yeah,
Arnest's
exactly.
restaurant.
That's
Yeah,
right.
we'll go to
that's right.
Arnest's restaurant. Yeah. I love it.
I mean,
Have you visited any of these 3D printing facilities yet? Any of them that are active, up and active?
yes, I have. One
Yeah,
in
yeah.
Florida, in Walton, Florida. There's one called Printed Farms. They're good guys. They're an open book. And there's one in Boston. They're between Boston and Louisiana. I forgot the brand name, but they're like yellow and blue, if that makes sense. But yeah, so I have visited. I have seen the machines. I have seen it work in action. So yeah,
They've got one in Grand Rapids that's pretty phenomenal too.
yeah. Icon
They're
3D is
popping up everywhere.
Icon 3D is the one that's popping a lot in Texas and Arizona.
Yeah.
So they're big.
And
But
having this close to, the areas that you're going to be delivering the product to is key, right? I mean, it's unbelievable what it would cost to ship that stuff.
Yeah.
yes, I
Do
mean,
that.
the one in Florida cost them $500,000, and the one I know in Boston, Louisiana, theirs machine is $200,000, and it's not including training either. So some people have some business models. They finance the machine, they rent out the machines, they sell the machines. Some don't do anything with the machine. They just kind of do the work for the client. So every supplier has a different type of business model. You see?
Cool.
So
Hey,
I got,
guys,
I gotta host a Zoom at 4 that I gotta let people in the room at. So
Patrick, hit me up. We're going to Puerto Rico again, man. January.
and I'm trying to make it happen, but life is in the way.
I know. Gentlemen, thank you. These small groups, man, it sounds like everybody needs to connect at some point. So I think it's
Great to
fantastic.
see everyone.
You too, Patrick.
Yeah.
Hey, Lawrence,
See ya,
before we cut out, I thought I saw some emails coming through. Are you guys doing some like events or webinars? I saw a webinar. I might have missed it. Did you have anything that you wanted to announce? I think you guys were talking.
We have a little just a webinar on our projects coming up on the 7th.
That's right.
At 11 a.m. Pacific time. So if anybody hasn't seen it, or if you guys want to join it, shoot me an email and I'll send you the links.
Yeah, man.
But,
and if you want to post that in the platform, totally
All right.
appropriate. Like shoot that out there. I saw the emails come through from pitch day, Jimmy's pitch day. But if you want to post that, man, just post it right in the main area. And I think it would be really cool for people to see.
Right on.
Yeah.
Good. Yeah, it'll be fun.
So did everybody get their questions answered? I mean, like I said, these small groups, man, sometimes I learn so much, man. I'm like recording it and taking notes. So I think it's fantastic. Thoughts before we cut out of here?
Oh, no, this was awesome. I'm looking forward to the next one. And on the next one, I want to talk about container homes.
All right, dude, I love it. Just gonna bring out all kinds of new 3D printing, container homes, franchising, QZBs. We covered it all today.
Yeah, we'll be printing the container homes.
Yeah, right there you go.
smart. Very smart.
Or definitely combining the container homes with the 3D printed,
That's possible.
yeah, no doubt. Absolutely. So
Man,
no,
that's awesome.
Ronaldo, I think you're definitely on this. I mean, that area, like I said, my dad's from Lawrence. I've got family in Methuen. I've got family all over, Boston area. So definitely an area that needs that. And I think it'll be well received, especially with the success that Lowell has had with their revitalized mills and that sort of thing. Lawrence is primed for it, and they've seen the actual results. They've seen that it can succeed. So yeah, but you bring innovation to it that's really key, I think.
Happy connecting, gentlemen. I can already see it in the smiles that everybody's going to be reaching out to each other.
Good stuff, man.
Yeah, very. Great to see you all. I'll catch up with you soon. Hit me up if you need anything. All right.
Sounds good.
All right. Thanks.
All right.
Everyone.
Thanks,
Okay,
guys.
All right, you
Take
guys.
care.
Take care.